Hello folks, in this video I want to show you how to identify market structures on crypto charts, and then I'm going to show you how to identify break in market structure. This is the second video of the complete smart money concept trading course I have made. You can actually find the playlist right here. It's a complete course. So let's go back to our chart and then I'll show you how the smart money take their trades, and then you're going to have an insight of how to also participate in trading with the smart money. So I'll be showing you everything in a step by step right here, so make sure you stay to the end. So we have three elements of market condition. We have the first one, which is a bullish market condition. The second one is a bearish market condition, and then the third one is a ranging or consolidating market condition. Let's start with a bullish market condition. We are said to have a bullish market condition when we have a series of higher highs, or when we have market creating higher highs and then higher lows. This is just a drawing. We can see how the market is moving. This is an uptrend. You can see how a bullish market condition is formed. So right here, from here to this level, we can see a series of higher highs and then higher lows. Why is it called a higher high? It is called a higher high because this last high has been violated and then another new high has been formed. If I take my writing tool and place it right here, let's give it HH and then say okay. Take it to this level. I'm going to show you how this works right here. So from this type of market condition, we can see that we have a series of higher highs, higher high, higher high, and then we have a higher low, higher low, higher low, and another higher low. So this is actually how a bullish market condition is formed. We violated the last high and created another high, violated the last high and created another high, violated the last high and create another high. Likewise, we also have higher lows and then higher lows. That means the low that was last created was violated, also another new low was formed right here. That is why we call them a series of higher highs and then higher lows. I'm going to show you this in a live chat, but let me just finish drawing everything for you to see how these things are formed. If I removed everything, so let me show you how a bearish market condition forms. This time around, we have a series of lower lows and then we have a series of lower highs. So let me just show you everything in this drawing before we go to our chart, and let's have it here. Let me also tag it and then come back and show you. So you can see this time around we have a lower high, lower high, lower high. That means this low is higher than this. Okay, this low is higher than this, and then the low here is lower than this. The low here is lower than this. So this is how a bearish market condition forms. We have violated the last low that was created and then violated another one, as you can see them right here. Violation, violation, and violation. So this is how a bearish market condition is formed. Let's go to the last one, which is a consolidating market condition, and then I will show you how that is also formed. We have this as a ranging market. Let's say we have two boundaries. Let me put these two horizontal lines right here, and then we have price reacting within this level. From this level, it just pushes up to this level, came down to this level, move up to another level up there, okay, and then came down again. It's just acting within this level. So we can see it acting within this level. This is known as a consolidating market or a ranging market as a whole. We can see that it has been bouncing within this resistance and a support level. So this is how we have the three major movements that we have in the market. This is what the smart money is looking at. Even though this is very basic, but you must have to understand this to be able to make informed trading decisions when you're taking trades. So let's identify these things in a live chart. If we should take down our chart to this level, and then let me expand it a bit. This is the 5-minute time frame of BTC USD. We can see that from this level, okay, from this level, price pushes up to this level and then retraces back. Another push again, 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 retraces back. So we can see a series of higher highs being formed. This is a higher high, and then this is a higher low. Okay, and then another higher high was formed, and then another higher low. Higher high was formed, another higher low. Higher high was formed, another higher low. So when you are trading and then they say the trend is your friend, this is what exactly this is saying. Anytime you see a violation around this level, it means you have no business selling in a bullish market condition. You should always be looking at the buy side and then be participating in the buy for you to be able to make profit and then stay away from trouble. And then whenever you see a bearish market forming, let's find a bearish market where we have a series of lower lows and then a lower highs. Okay, let's find a bearish market condition. We can see one right here. From this level, price pushes to this level, came back again, pushes to this level, came back again, pushes to this level, came back again, pushes to this level. So we have a lower high at this level and then a lower low at this level. Lower high was formed lastly and then a lower low. So we see this series of lower low and then lower high, lower low was formed. Until there is a violation of this pattern, you should always remain a seller in this market. Thus, you must always remain bearish in your trading decisions so that you will avoid being affected when the institutions or when the smart money is taking their buy again. You can trade against them, but you will definitely find it difficult to remain sustainably profitable using that type of concept. So you have been able to see a bearish market condition and a bullish market condition. Let's find a consolidation and then I'm going to show you how that is also formed. So right here we have a consolidating market. We can see if we should place our horizontal line right here and take another one right here. We have seen price behaving within this level. Okay, it has just been bouncing up and down around this level. Okay, even though right here we pushed below it, but you can see that we came back right into it and then we have another push right up there. Okay, it has been acting within this level. So this is a consolidation where the market moves within a very defined trading range. You can see it right here. So you can identify this and go through your chart and see some of these things being formed. So let's talk about break of market structure. What exactly are we saying when we say break of market structure? Just like we've identified the three market movement, which is a bullish market condition, a bearish market condition, and a consolidating market condition. Now from this push right here to this push, there is a market structure that was formed. For we to say that this market structure was violated or has been broken, we must have to see that the price pushes above this level. Okay, once we push above this level, this is where you should identify break of market structure. Now in identifying break of market structure, when we go to the chart, I'm going to show you the candle tip, that is the candle wick, is used for identifying market structure, and then the body of the candle that broke through that tail, or also known as wick, is known as the break of market structure. We identify market structure with the wick, and then when we break above the wick, we say that we have broken market structure. Here we have a break of market structure. Whenever we breach above this level, we have a break of market structure. When we are having a downtrend also, when we see a break of market structure right here, break of market structure, break of market structure. So why this is happening is because smart money is trying to deliver price from here to here. And then for them to do that, they will have to keep picking orders and picking liquidity for them to reach to that side. So from here also you can see price money is trying to deliver liquidity to this end. So let's identify it in a live chart, and then I'm going to show you how to identify those things. If we take back this chart to where we have those movements, okay, let me go to that side and then you are going to see it clearly. So right here we have a little movement from here. We pushed up to this level, okay, and then we have been bouncing around this level. Now let's identify market structure. Right here, market structure was already formed at this level. I told you that if you are identifying market structure, you must use the tail to identify. And then right here we have a break of market structure. Write this please. Okay, we have broken market structure above, and then now our focus is from this movement to this movement. So if you are trading this, you must always know that from this level, you should think of when price should retrace back to where this market was broken, and then you can take your buy again, or you can use your Fibonacci tool and measure the distance from here to the upside. That is the last level it created, and then take your trade decisions whenever your retracement comes to the discount level or premium level. Below this level is where you have your premium level, and then middle of it is where you have your discount right here. Okay, this is the discount level. Below here, from this level to this place, is your premium. Let me put this line here so that you can see it's your premium level. If I change the color to this color, you're going to see it. From here to here is your premium level, and that is where you can take your trades comfortably from this level. I'm going to show you how to filter out this. I'm not here to show you trade signals. I'm only showing you that. We will do that subsequently. You will see how to take trade, how to filter out trade. I'm just showing you how to identify break of market structure. So once you're able to do that, you can also go ahead and check other things. If you can come to this place, you can identify a lot of break of market structure in this place. Okay, we can see that price pushes from the downtrend. We have been coming to this level. Price has broken below this level, so we have broken market structure here, and then it formed another low, then pushes back again. Now right here we can see that we have broken market structure to the upside right here. If you place your horizontal line right there, you can see that we have violated market structure around that level. Let me take it to that level so you can see. So we have violated market structure around this level, so we pushed above this place. Okay, we pushed above this place, so we can say that this trade has turned to a bullish market condition. So we can always identify that even if we have a trending market, let's say a market is trending, and then we can use this information to know exactly when a trend is supposed to end, and then when we should think of changing our bias or change our trend direction. So when we have, let's say we have a trending market, which is a bullish market condition, okay, we can see it going up from this level, break of market structure, break of market structure, break of market structure, break of market structure, break of market structure. We have a violation right here. Okay, if we have a violation, something like this, we have broken below this level, we can comfortably say that this trend has changed direction. Now we can see a signature of the bearish market condition now. So we can use this information to know exactly when a trend is ending. Right here you can see from here to here we have had a series of higher highs and higher lows, which is a bullish market condition. You don't want to be selling in this kind of market condition. You should only be buying. You should only be taking a buy market order from this trend, and then when you change direction, you should think of selling in this kind of market condition. If we take it down, we can see a clear sign of where market structure has been broken. Right here we can see market structure has been violated, and then we turn to this bearish condition. If we should take this over and over, we can see this signature on chart. Let me show you another one that we can clearly see, so you can see how these things are formed. Okay, so from here we have a bullish market condition. From here to here, a higher high, higher low, higher high, higher low. The last high that was formed was here. Okay, and then the last low that was formed was here. So when do we say we have broken this low? We can see that price swing to this level and it could not reach its last level. It came down. This is the new low that we have right here. So we can say that we have broken market structure once we have cleared this level to this level, and then we can comfortably say that we are now in a bearish market condition. We can see it happening right here. If I take this drawing tool from here to here, here to here, here to this level, we can see these kind of things over and over again on our chart, and you can see that market condition has completely changed. So guys, you can go ahead and try this. If you have any question, you can let me know in the comment section. I will be right there to answer you. So this is the second video of this particular course, guys. Make sure you join my Telegram group for the signals, and then register with Bybit with my link in the description. Bybit is actually one of the best trading platform for futures trading. We'll be trading together using Bybit, and then if you register with my link in the description, you are going to have a deposit bonus given to you of up to $30,000 depending on your trading volume and your deposit. So guys, this is all about this video. I hope you've learned a lot about this particular video. Make sure you let me know in the comment section if you have any question. Thank you guys. See you in another video.